Hello, investors, and welcome to the weekly market report with the market guys. I'm AJ Monty. If you were surprised that the market sold off this week, then chances are you didn't see my report from last week where I forecasted that we would drop, and most likely over time we're going to give back the profits from last week. And as I zoom in here, you'll see that this is the line that I drew last Friday. I said we would move lower. This was very close to a 2-week forecast, so I'm going to move that out. But my target is still down here at this gap fill support level right there. Now, there's a lot of other things going on here. First, let me erase that, and then I will draw this out. I think that we're going to continue lower next week and eventually fill that gap, at which point that will turn to support, and we could very well see a bounce from that area. Now, as I zoom in here, you'll see this small little body candle. That's known as a spinning top, but it's falling within the body of this green candle from yesterday, which was the 2nd of April. That's known as a harami. That's bearish. And you can see that the stochastics down here is still moving lower. I think that will cross with the sell signal. And the CCI down here is hinging lower. I think that too will cross the sell signal right there. So again, next week I think we're going to see some pressure on the markets and continue lower. So make sure you're not going crazy with any new long positions. I would trail stops in any positions that you have right now and protect against any losses. Now, if we look at the Russell 2000, which is a more broad-based index, you'll see again, my lines are left in place from last week. We came very close to hitting my target here. This is the line, again, that I drew last week on Friday when the market closed, and I put that out 6 a.m. on Saturday. So it's almost as though the Russell 2000 was following my line precisely. The only challenge here right now is that while that will act as a gap fill support level, I do believe that the markets are going to go lower on the Russell and test this low down here. Because if you look at the stochastics right there as I zoom in, when the blue line crosses down below that red line, that's a sell signal. And the CCI, which is one that I rely on most out of the two oscillators, I favor the CCI. I think the CCI is going to continue lower as well. So I'm just going to extend this line out just like that and say that we're most likely going to go lower to test that support level. Now, if we look at the Qs, which is more or less the tech sector. This is the Invesco QQQ Trust. You'll see again, same story. I had the markets dropping. This is a bearish harami. The sell signal is occurring right now on the stochastics. We're very close to a sell signal right there on the CCI. So I think that the Qs are also going to drop lower just like that. I'll erase this line. I'm going to keep that target in place as this gap fill support level right there. 80% of the time, gaps fill. It's important that you understand that. And on our website, you can go to the video tab, and there's a video that talks about gaps. So just go to themarketguys.com, click on the videos, and you'll see gap trading there. So 80% of the time, gaps fill, which means the price will most likely come back to the place where the gap first started, and then we can see whether or not that turns into support. Now, if we look at the spiders, ticker symbol SPY, I'm going to go back and forth with the spiders and the VIX. The spiders also showing a bearish harami pattern right there. CCI and the stochastics both are moving lower. There's a gap below the market. So again, all I'm going to do is move this over to the right because this 20 period moving average, that blue line, is acting as resistance. You can see that. Every time the market moves up to that blue line, the 20 period moving average, it pulls back. And I think it's going to pull back again, just like that. So be prepared. Now, looking at the VIX, which is a contrarian indicator to the S&P, interesting thing has happened. The markets dropped and the VIX dropped. We moved up earlier in the week like I said we would, but we didn't hit our target. I'm going to tell you, there's a very strong chance that the VIX is going to go up next week. And you can see we have a long stretch of red, 1, 2, 3, 4, 5 red candles in a row. That's known as a stale red light. I think the VIX is going to go up. You can see that the stochastics is still going lower, but the CCI is already oversold. I think the CCI is going to move up. And if the VIX moves up, remember it's a contrarian indicator to the S&P, then the S&P will most likely drop. And that's what we talked about already when I pointed the charts out to you there. So that is my market report. Please stay in touch. We're talking risk management to as many people as we possibly can. We have a Q&A open house session coming up in a couple of weeks. Hope you can plug in there. And make sure you stay in touch with the Market Guys Facebook page, because every now and then I put out a market alert that you might want to know about. So you have a good rest of the week, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.